Warren Buffett is probably the most popular and looked up to stock market investor of all time. And while my investing strategy tends to be a bit different, I'm usually more focused heavily on growth opportunity for the future and innovation and tech, things like that. But I still love to track his portfolio and stay up to date with the moves that his holding company Berkshire Hathaway is making in the market because they have a lot of influence over the economy and more specifically the stock market, as they hold over $350 billion of just stocks alone. This is a massive conglomerate and holding company, and of which, by the way, Warren Buffett is still the CEO of that company at 92 years old. How crazy and impressive is that? Anyway, their most recent quarterly filings were just released to the public, so we're going to take a look today at the 5 largest stock purchases that they just made in the most recent quarter, of which 3 of them, by the way, are brand new additions to the portfolio. So that's going to be super interesting to take a look at there. And I'll of course give you my own opinion on each of these stocks, and I'll even rank them from best to worst based on that opinion too. So I can't wait to share all of this with you. I love doing these videos for you guys, but hope you enjoy it. Hit that like button, subscribe, really helps the channel. But let's go ahead and just jump straight into this list. All right, now we'll be counting down here from smallest to largest position in the portfolio, and stock number 5 will actually be one of those brand new additions to the portfolio, which they purchased over $17 million of in the second quarter, and that's going to be Lennar Corporation, ticker symbol LEN. Now, if you've never heard of this company, it's mostly a home builder that goes around building and selling homes across the country, having now built over 1 million new homes since the 1950s. And while they do have other parts to the business like finance and investment services, the bulk of it is really home building. And so this caught some people by surprise that Buffett would make a bet here on the real estate market, considering how expensive home prices have become. There has been a small dip recently because of rising interest rates, but those housing prices are still extremely elevated. And the other effect of rising interest rates is that it's also raised mortgage rates to the highest level in over 2 decades. So if we were to go into a recession or the economy was to take some heavy damage, it's logical to think that the housing market would probably crash right along with it. However, the counter argument is that we are still going through a housing shortage right now, in large part because would-be sellers don't want to sell and rebuy into this high mortgage rate environment. So Buffett is probably betting that the low inventory levels will force people to keep buying houses at these higher prices, especially brand new ones that are built by companies like Lennar. It is logical reasoning, I have to admit. However, I'd be worried that if a recession does actually hit anytime soon, then many of those reluctant sellers are gonna be forced to sell, which would send home prices crashing and actually hurt home builders like Lennar. So there's some risk there. Regardless, all of this feels like a lot of speculation to me rather than sound long-term investment, and that's why I'm not the biggest fan of these real estate type of stocks right now. However, I don't have anything against other people that want to invest in them, but they're just not the most appealing to me personally. As it stands though, Lennar has actually done a great job financially, putting up solid growth on both sales and profits in recent years. However, that's obviously been boosted by the rise in home prices, which is hard to know how long it'll last. In fact, sales are now expected to actually decline this year and then be almost flat the year after as well. The stock price has also risen already to a new record high, and while the valuation is still technically cheap at a PE ratio about 40% lower than the sector, which is very good, I just feel like it's not as an exciting of a stock anymore, or as big of a bargain as it would be if it was a bit lower. And even the dividend is really mediocre at best with just a 1.3% yield. I can see why someone like Buffett would invest in it for that low valuation, but it's not a stock that I would want to be taking a chance on myself. So I'll be reasonable. I'll give it a number 3 ranking for now because I still need to see what else is on this list. Okay, well, moving on to stock number 4, that's actually going to be another brand new addition to the portfolio, this time in a company called NVR, ticker symbol NVR, which Buffett purchased over $70 million of. And if you've never heard of this one, Well, it's basically the same as Lenner, as we've got another home builder here. And because of that, you're going to see many similarities. In fact, the stock price performance and the financial performance are both, almost identical. However, I'm a bit surprised that Buffett went heavier on this one because I actually think Lenner is the considerably better choice. First of all, Lenner is more than 3 times the size of NVR by both sales and profits, and yet despite the larger size, they're actually taking a much smaller hit this year, which tells me that NVR is more prone to taking damage during a weak economy or possible housing market crash. Lenner also pays a small but very high growth dividend with a tiny payout ratio, while NVR doesn't pay a dividend at all. And yet, despite those better metrics, Lenner actually trades considerably cheaper too, at a forward PE ratio that is over 30% cheaper than that of NVR. So this ranking is pretty easy for me. I would much rather own Lenner stock just for the better metrics alone, and therefore I'll keep it there at number 3. And NVR is going to have to go a little lower. It'll go to number 4 ranking. Oh boy, guys, I'm not sure if you would believe this, but coming in at the next stock here at number 3, we actually have yet another home builder, this time in D.R. Horton, ticker symbol DHI, which Buffett also added as a brand new addition to the portfolio at over $720 million. So that's over $700 million more of this stock versus Lenner Corp. So is it that much better of a stock? Well, I do actually think that it's considerably better than the other two. I mean, they're already the biggest in the country with slightly more market share than Lenner, and despite that massive size, they still grew sales orders last quarter by a whopping 37%. And you know how Lenner and NVR are supposed to see revenue declines this year? Well, Horton is actually expected to grow still by nearly 5%, and yet, despite all that, Horton is also cheaper than the other two stocks by a forward PE ratio as well. The only knock that you could really make on it is that the dividend is a little smaller, but Lenner's dividend was already tiny to begin with, and NVR doesn't even pay one. So that shouldn't really be a factor, so much in investing in this. Overall, I just think that Horton is a very strong performing stock that is still near an all-time high with just as good financials as the other two, which I would argue that they're even better, and thus it's going to get ranked higher. So I'll replace Lenner with Horton at number 3, and then I'll push Lenner down to number 4 and NVR down to number 5. Okay, that'll do it for the 3 brand new stocks. So what about the 2 remaining stocks that Buffett just added to his already existing positions? Well, coming in at stock number 2, the second largest, that's actually going to be a stock that was a brand new addition last quarter. So this quarter, it looks like he decided to just add more to it, and that is the finance company Capital One, ticker symbol COF, which he increased the position on by a whopping 25% in the quarter, so a big increase. And again, that's after buying it for the first time ever in the previous quarter. And it has now grown into a $1.3 billion position. Now, I'll just keep this straightforward in terms of their business because while Capital One offers many different financial services, they are still primarily known for their banking products like their no-fee checking account, their high-yield savings account, and especially their popular credit cards like the Unlimited Cashback Quicksilver card. I've always felt that it's a pretty decent stock overall, especially for their margins, doing over $28 billion in sales, with over $7 billion of that going straight to the bottom line last year. That's very good profitability. However, the reason why I've never felt the need to invest in them myself is because despite being a well-established finance company, their financials have actually been pretty volatile and difficult to predict, as they were up in 2019 but fell in 2020, then rose in 2021, only to fall again in 2022, and are now expected to decline again this year before returning to small growth next year. And their profits have been just as volatile too, with EPS rising in the previous 5 years, but are now expected to decline over the next 5. And with that volatility also comes a pretty volatile stock price that has seen many ups and downs over the years, but is currently down almost half its value from the top. On the bright side, that does leave them with a valuation that is significantly cheaper than the sector, so I can almost guarantee that I know why Buffett is buying this stock. He clearly sees it down a lot and thinks that it's a good time to jump in as a value turnaround play, which he's always been known for doing those types of moves. But here's the reason why I'm not following him into this one. Why would I take Capital One when I can get Chase or US Bancorp that have much higher dividend yields, like USB is over 5%, while Capital One is only 2%. And on top of that, Chase and US Bank are much bigger and, in my opinion, much safer too. In fact, Moody's recently downgraded their outlook for Capital One from stable to negative, citing their riskier exposure to corporate real estate given the weak economy and possible recession occurring early next year. And this is all coming after the collapse of several smaller banks too. So I'd just rather invest in something safer and larger like Chase or US Bank. But that's just me. That's just my own personal opinion. And for those reasons, I'm gonna bump Horton up to the number 2 spot and put Capital One in at number 3. And the reason why I'm ranking it this way, I know it looks a little weird, but it's because I like Horton more overall, but since the other 2 stocks are also home builders, I think it makes sense to split them up with Capital One in the middle for more variety and diversity. So that's how I'll rank them for now. Okay, that will, however, leave us now with the final stock of the list, which is also the largest. And yeah, no surprise here, Buffett loves to consistently buy his oil and gas darling Occidental Petroleum, ticker symbol OXY, which he has now amassed a position worth over $13 billion. And in my opinion, it's not so much that OXY is a great stock to own for us outside investors looking in, but rather that Warren Buffett just gets such a great deal on his specific shares. See, OXY was a stock that was in heavy decline for years, all the way through the 2020 pandemic, until Buffett entered the stock in 2019, essentially helping them acquire another giant in Anadarko in exchange for being able to purchase preferred stock in the company with a preferred dividend. And when OXY went through a lot more pain in 2020 and had to cut their dividend, Buffett was actually able to keep his dividend intact regardless because of its preferred status, which means that the dividend yield crashed from around 8% down to just 1% today for the rest of us, while he continues to rake in gigantic amounts of money every year. And by the way, at just 1% for the rest of us, that's a horrible yield for a legacy oil stock. They usually yield much more than that. And while OXY does have some future growth prospects, like their exposure to the US Permian Basin, that I think will become increasingly more important in the future due to all the geopolitical conflicts going on these days, which could potentially send the stock higher. The fact is that most of the benefits from the recent spikes in oil prices have probably already been experienced by OXY, which is why their sales are expected to decline by over 25% this year. And yet the stock has already recovered to a multi-year high, leaving an extremely rich valuation of a forward PE ratio that is about 70% higher than the sector. I'm sorry, but that's just way too expensive for a legacy oil giant that barely even pays a dividend at all. They get the last place ranking from me because if I got the same benefits as Buffett, then I would, of course, rank it much higher. But as an outsider, I think there's way better options than this one. But that'll just about do it for this quarter's update on Buffett buys. I was sort of forced to rank Horton at the top number 1 spot just because it's better overall than the rest. And then I put Capital One at number 2, also sort of by default as a way of splitting up all the home builders. And then I put OXY in last place because I don't get that special preferred stock treatment that Warren Buffett does. So yeah, overall, I'm just feeling really kind of the same way that I always feel about Warren Buffett's purchases. They're just so heavily skewed towards value, and it's not just value. I mean, I like value, you guys like value, everyone likes value in the stock market, but it's that boring type of value. I mean, I can summarize like this entire quarter here with Buffett buying just into 3 different markets, that being real estate, or more specifically home building, and oil and finance. And that's pretty boring to me. I mean, you guys know that I like my tech stocks, I like my innovation, I like my future long-term growth potential. And I just don't really see that here. I mean, I see value for sure, But it's those type of stocks that just, really rich people can buy into and extract value from. But the rest of us, I think we're looking for bigger gains, more growth potential, longer term, things like that. Anyway, that's just my opinion. Don't hate me, guys. I still like Warren Buffett, and I think he's a very smart guy, and I love keeping track of everything. By the way, he sold a lot of stocks in that quarter, so let me know if you'd like a video on the stocks that he sold as well, because I think that might be kind of interesting. I'm thinking about maybe making that video for you as well, so let me know if you'd want to see that. But anyway, I hope that you enjoyed the video regardless. Thank you so much for all the support. If you want to go above and beyond, help keep this channel alive, you can go to the link, go over to Patreon. Support me that way too. It really helps so much. But just watching the videos, liking, subscribing, it means the world to me. Thank you, my friends. I hope you're all doing well, and I will catch you in the next video. Take care, everybody. Bye-bye.